Funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Luke Beckman analyzes USDA estimates on grain stocks and planted acres. Ron Plain looks at profit margins for pig producers. Amit Jhala discusses weed control, and we learn more about beef trade between the United States and Japan. Luke Beckman from Central Valley Ag is our grain market analyst this week. USDA reports helped add intrigue to corn and soybean markets. Both exploded higher after the estimates on grain stocks and planted acres were released Tuesday before taming down in the following days. The agency's estimates show a record number of soybean acres with 2% fewer corn acres. If the projections are realized, Nebraska would be the third biggest sower of corn and the seventh largest planter of soybeans. We talked with Luke Thursday afternoon and started by discussing Tuesday's reports.
Well, certainly some fireworks. I think that June 30th did not disappoint in providing some typical volatility. This time one of the biggest bullish divergence when we talk about the stocks numbers for both commodities. So very powerful to see it. It kind of combined with really, a drop in the crop ratings on Monday afternoon, and I really don't think that we traded those crop ratings until after 11 o'clock on Tuesday. So I think there were a lot of things kind of building there. You had the end of the month, you had the end of the quarter, and the funds were certainly short on both markets, corn and soybeans. So you throw all of it together, certainly friendly and a pretty powerful day.
Yeah, tell me how the markets reacted then and how they've reacted since as we talk Thursday afternoon.
Sure. I mean, the markets, the funds have certainly gotten out, and now everyone's kind of trying to put their arms around, how bad is the crop really being affected out east? The acres really didn't give us a whole lot on Tuesday, I don't think. I think it was more of a stock situation and current crop ratings. So I think we're going to look at the weather forecast Sunday night. I think that's going to give us some direction post July 4th, which is typically a turning point in the grain markets. Well, and one thing that we need to keep in mind is we're going to look at the weather forecast and probably look at next Monday's crop ratings as being pretty important. Now remember, any kind of a bull market, I know everybody wants to get friendly here, but we have to continue to feed that bull. So you're going to have to see crop ratings continue to slip to propel corn and soybeans higher. And really, we're going to need some more rain out east to keep that happening. I think sunshine would actually be viewed as negative,
Let's talk about those stocks numbers. What do they tell us about usage and demand and how we're chewing up the crops?
Well, with corn first, Jeff, walking into that report, not a lot of analysts were too friendly on third quarter feed demand for corn. The March 31st reports kind of set us up for weaker markets all through the third quarter, and we saw that. So walking into this report, we thought that we would get some confirmation that old crop carryout was growing, and it did not happen. We chewed through a lot of corn in the third quarter, or it's even possible that we overestimated the size of last year's crop. So I think that was a surprise to the market. You saw the numbers come in about 100 million bushels less than what the expectation was.
Anything surprising from Nebraska's perspective, or do you think those acres, the number of acres is about right?
I don't think they deviated too much from what we thought in March. Keep in mind, that survey was taken the first 2 weeks of June. So it is possible that we can see some revisions before it's all said and done. But soybeans certainly more impacted in the acreage. We still have a lot of question marks around soybean acreage, in my opinion.
As you said, these reports are making a lot of people friendly. What do you think here in terms of what people should be doing for sales if they're waiting on old crop or new crop? I'm sure some got made after the report, but what happens now?
Yeah, a lot of cash corn, beans moving, rightfully so. Basis was certainly backing off pretty heavy. For every dime we got in corn, we lost about 3 to 4 in basis. So I think old corn needs to take a look and get some of that stuff sold. Basis is not friendly. A lot of your end users got a lot of coverage in place on this run higher. Definitely need to take a look at new crop. It needs to be something we get done, and ask yourself the question, how much do I have done? If you need to add to sales, get it done on corn. Look at 16 corn as well. You know, that's a value that's trading $4.30 right now that we should probably take a look at. Soybeans look like a sale too on new crop as $9 cash off the combine hit all over the western corn belt. That's something that we need to take a look at if we're behind on new crop soybean sales.
So since those markets both jumped so hard after the report, and today they're up again as we talk, does that give you at all a bullish tilt, or is it just kind of hanging around right now?
No, I think it certainly does. The charts are friendly for, for corn and soybeans both. But again, walking into a 3-day weekend, I think that we're going to have to continue to feed that bull. The funds got long on soybeans. They're going to have to stay long with corn. They've continued to trim that short. So one thing to keep in mind is the macro environment is not friendly for these guys to continue to dump money into these markets. So we're going to have to see crop ratings, I think, continue to decline to continue to propel both corn and soybeans higher.
Next week, Roy Smith will join us to give us his thoughts on corn and soybean markets. We also have Hog Market Analysis this week with University of Missouri Extension economist Ron Plain. The USDA's quarterly hogs and pigs report shows an industry that continues to rebound from the porcine epidemic diarrhea virus. While the inventory of all hogs and pigs was up only slightly from March, it was 9% higher than a year ago, and the average pigs saved per litter was a record for the March to May time period. For the producer, however, June was a difficult month as prices eroded amidst an abundant supply of pork, shrinking margins for producers. We talked with Ron Tuesday morning and began by asking for his initial thoughts on the quarterly hogs and pigs report.
Well, it's kind of surprising, Jeff. More market hogs than we were expecting and fewer sows to farrow than what we was expecting. So sort of some good news and bad news as far as price is concerned.
Yeah, tell me about those farrowings, what we're going to see later on this summer and into fall for supply.
Okay, USDA said spring farrowings was up 1.4%. That was a tad bit less than what we was expecting. As far as farrowing intentions for the summer, June, July, August, down 2.5%. That was below trade expectations. And fall farrowings, September, October, November, down 4.3%. So that's a big drop off in litters this fall, and that's going to give us reduced slaughter next year compared to what we thought we was going to have.
As it relates to PEDV, Ron, how does it show that this report show that the industry has responded?
Well, pigs per litter this spring up 6% compared to a year ago. It's a dramatic turnaround. The first winter with PED here in the United States, death loss was very high. Pigs per litter down about 5.5% compared to a year ago. The second winter up 6%. So most all of that death loss from the first winter was eliminated the second time through.
All right, meanwhile, can you describe how rough prices were during the month of June?
Yes, it was a tough month. Normally June's the highest price month of the year, and we got a little bit of a rally in late May, but it was downhill from the start to the finish of June. We're ending up the month with prices around $70 on a carcass weight basis, around $50 on a live weight basis. But we killed lots of hogs. In fact, June hog slaughter is the highest ever for the month of June. So that's why we're going to come in about 11% higher than a year ago, and that's why prices trended down.
How has that affected profit margins?
Well, we made about $26 a head during the month of May by Iowa State calculations. We're probably still going to be in the black for June, but probably in the single digits as lower hog prices and a bit higher feed costs trimmed those profits.
What do you believe is the forecast for July, August, September, and how does that then affect those profit margins?
Well, those market hog numbers are high. The heavyweight group up over 13% compared to a year ago. The 120 to 179 pound group up 11.5%. So slaughter is going to stay high. Every reason to expect prices to continue to trend down from now to the end of the year. We're going to see carcass prices move from right now the low 70s to the low 60s by the fourth quarter.
You mentioned hog slaughter. What about weights, Ron? Where are they at?
Weights are coming down. Lower profits and the slaughter weights are coming down. Iowa, Minnesota barren gilt weights went above 280 pounds back in November of 2013. We stayed above that mark for 83 consecutive weeks until we got to April this year. Then we started down, and now we're back in the upper 270s. During the summer, we're going to see weights continue to stay light and could well be down below year-ago levels for the rest of the year.
Next week, we'll get export numbers, international export numbers for pork. What are your expectations?
It was a very slow start on exports this year. We're expecting better performance in the second half of the year. In all, probably for the year, down a bit, but we're hopeful of a recovery as we move into the third and fourth quarters.
The latest pork export numbers for the month of May will be released Wednesday. The next quarterly hogs and pigs report will be released the final Friday of September. The July Nebraska farmer says there are over 60,000 center pivots operating in Nebraska, but only a small percentage of producers use them to apply crop nutrients and pesticides through chemigation. One farmer using the technique is Randy Papenhausen of Coleridge, who casually adorns this month's cover. The Associated article says with lower grain prices and the risk of losing nutrients after this year's heavy rainfall events, fertigation offers an option to supply crops with the nutrition they need when they need it. You can check out the July Nebraska Farmer to learn about the economic advantages of fertigation. Nebraska Extension held the 2015 Weed Management Field Day in Clay Center on Wednesday. The event was sponsored in part by the Nebraska Corn Board and showed growers, advisors, and others in the industry demonstrations on weed control in both corn and soybean fields. At the event, we talked with Nebraska Extension Weed Management Specialist Amit Jhala about resistance issues in the state and about what was new at this year's field day.
There are some new herbicides are recently registered in corn and soybean. So it was a good time to make growers and others familiar with these new herbicides that are coming to the market in corn and soybean. For example, Acuron is one corn herbicide recently registered in corn. So that was a good project that growers were interested in. Plus in soybean there are some new herbicides including Trivens and some other herbicides, for example Solstice, Marvel, Anthem Max, and in fact Diflex, which is a new formulation of dicamba in corn. So yeah, there were some new herbicides that we demonstrated during the field day.
Tell me about those tools. How can farmers use them to better manage weeds in their fields?
The message is same, using different mode of action of herbicides for management of herbicide resistant weeds, plus it will help us to make sure that we do not end up with having new population of weeds that will be resistant to any particular herbicide. So use of residual herbicides plus tank mixing herbicides with different mode of action would be the key. Additionally, integrated management approach would be more useful rather than relying only on one herbicide.
What's the update on herbicide resistant weeds in the state?
So far we have 8 weeds resistant to at least one group of herbicides, including 6 weeds now that are resistant to glyphosate, including common water hemp, common ragweed, giant ragweed, kochia, mare's tail, and palmer amaranth. So these are the 6 weeds that are broadleaf weeds, and they are already problematic weed to control, and now they are resistant to glyphosate. So these 6 weeds are the greatest challenge for Nebraska corn and soybean producers, and we are conducting several experiments for management of those resistant weeds.
Such as, or things that might be able to be useful in the future?
Yes, for last 3 years we conducted experiments near to Fremont for management of glyphosate resistant common water hemp. Same way we did studies for control of glyphosate-resistant giant ragweed. And this year, in fact, we have another field day on August 4th, where we are going to discuss about different management approach for control of herbicide-resistant palmer amaranth.
Last year when we talked at this field day, I think, you said if your weed control program worked really well this year, you should change it next year. Does the same still hold, or could you reiterate why that is?
Yes, no, I would like to hold the same slogan again and again, and that is what I told growers today. Like, although your herbicide program looks good today, you still need to change it next year, because that is the way you are going to rotate your herbicides, rotate your crops, and that is the key for management of herbicide resistant weeds, plus to reduce the chances of any new herbicide resistant weeds in your field.
As Amit mentioned, the herbicide-resistant palmer amaranth management field day will take place August 4th near Shickley. We'll link to more information about the event on the Market Journal website. We'll have more from the field day next week when Nebraska Extension entomologist Bob Wright will describe which insects corn and soybean producers can be looking for when scouting their fields. Japan is the #1 market for Nebraska beef and beef products. We explain that relationship in detail on our May 8th episode. Through the first 4 months of the year, exports from Nebraska to there are up 17% compared to the same time frame in 2014. As we've told you previously, after discovery of BSE in the U.S. in 2003, Australia became Japan's top supplier of beef. It now has a significant tariff advantage when shipping beef to Japan, thanks to the Japan-Australia Economic Partnership Agreement, or EPA. However, a favorable Trans-Pacific partnership could help even out the competition. During our trip to Japan in late April, we talked with Cargill's Tatsuo Ishii about beef trade, starting by looking at how BSE impacted the Japanese market for U.S. products.
Well, just looking at all the import quantity in Japan, actually the historically high level of imports was recorded back in 2000. And at that time, the total consumption of beef went over 1 million metric ton here. And then 2001, we had a BSE case in Japan that reduced the total, consumption. And then 2003, another big case in the U.S. of the BSE, and that further shrunk the beef consumption overall. So, U.S. BSE case really hit here. Not just for our business, but entire beef consumption so much.
Has the level got back to where it was before?
Unfortunately, we haven't yet, but what I mean is that we are in the process of recovering it. Because December 2003, after that, we actually couldn't import any beef from the U.S. And in 2006, we are allowed to import. But with severe restriction of the age, which namely either 21 months or under. And then in February 2013, we get that restriction loosened to a 30 months or under, so that we are approaching to the level.
How big of a deal for a company like Cargill? How big of a deal was the 30-month and under approval?
That's pretty big deal for us because of the age restriction. Prior to, we call it the UTM, under 30 months. When we had an age restriction age 21 months or under, I say about only 15% of the total kill that we are processing in our plants are available for this market. But change it to 30 months or under, it went up to 95% of the total the cattle that we are producing. So that nowadays, actually, I say all the cattle that we are processing in our plants can be exported to Japan.
You have a plant in Schuyler, Nebraska. Is it known here that beef from Nebraska has a certain quality, or do restaurants and businesses know of beef from Nebraska?
You're right. Yes, people here actually prefers beef from Nebraska, or we call it the northern part of the U.S. Because maybe traditionally it's a cattle type, somewhat different from the one in the Texas or South. And also, at least the people in the market understand that the feeders in Nebraska is relatively small, so that customers image to those small feed yards is that the owner of the feed yards takes a better care on the cattle, which may be right, may be wrong. I don't know. But that's the image that our customers has, so that they had a pretty good image for cattle from the, raised in Nebraska and then beef processed in plant in Nebraska.
Japan's already a big importer of beef and pork, but can they grow the market even further?
Yes, definitely. We believe that the market for beef here in Japan is growing, especially for imported beef, because there are several reasons. But just looking at the domestic beef production, that's really kind of matured and then saturated. And thinking about the producers right now here in Japan, beef cattle producers right now is getting old, and they're having some issues with the successors. So that I cannot expect so much growth in the domestic production, or rather, in fact, it's going to be slightly shrinking year by year. So that even though the beef market is stable like that, and less domestic production means there's an opportunity for people like us.
In the beef trade, outside of strictly meat, what other products from the animal is Japan a big buyer of?
I say with the confidence that tongue is one of the biggest items that Japan is actually contributing for U.S. Beef industry. I don't have any exact numbers or figures, but I say more than 80% of the total production of tongue actually is coming to this market.
How much value does that add to the animal for the farmer in the U.S.?
That's a lot. That's a lot. Just thinking about what we are currently selling at is, and then 3 pounds per ton. Just simple multiplication and simple math tells me at least $10, somewhere between $10 to $15 a head, by just selling the ton to this market is a gain for the producers.
What would TPP do for this market?
Oh, that's going to be a great deal for us. Right now, one of the issues that we are struggling right now is the competition with the Aussie beef, because Australia got the EPA already signed with the Japanese government, and so that they have a 8 to 10% tariff advantage right now. So, if we offer the same price, Aussie always gets a better deal for our customers, so that we are facing a big trend that this shift of the demand from U.S. beef to Aussie beef. Not only with that, but that's one of the reasons, so that once the TPP is signed up, at least we can fight with our competitors at the even field. That's a very good deal for us.
Now with an update and outlook on moisture conditions as we go through summer, here's Nebraska Extension State Climatologist Al Dutcher.
Well, folks, we're here for the weekly forecast, but unfortunately, because of the university shutdown with the 4th of July, we thought this would be the best opportunity to give you an update of the drought monitor and what we're seeing in terms of potential as we go through the remainder of the year. We do know that we've had significant moisture all the way from the southern plains through the northern plains, as the precipitation really turned itself on as we moved into early May. In fact, looking at record precipitation across a substantial portion of the southern plains all the way up into Nebraska. And that has continued off and on now for the better part of 4 to 6 weeks. And if you look at the monitor compared to what it was 4 months ago, it looks substantially different. Big items of note: we are starting to see the development of drought across the southeast. Whether or not this will continue remains the unknown question. But from past experience, this is an area we need to watch very closely, as high pressure is kind of locked into place, and it looks like we'll probably see further deterioration before we see any tropical activity start to infringe onto this area and wipe out some of this dryness issues. The question is, will it expand to the north? It's been aggressively west across the eastern Corn Belt, and so if this dryness starts to move in, I think the major concern for this region would be turning real hot, dry after all this excessive moisture and having shallow-rooted corn, and then unfortunately firing up real fast. To the west, we've actually seen some improvement. As bad as conditions are in California, a substantial area of this part of the region has reduced the drought 1 to 2 levels, but This is a dry time of the year, so we'd expect that this will start to increase as we go to the late summer. And the question remains, will we get an El Nino strong enough to really generate the precipitation to break the back of this drought that's been ongoing now for the better part of 4 or 5 years across the western United States? Well, let's take a look at the sea surface temperatures, see if we've got anything in play. These are basically your anomalies of sea surface temperatures, and you'll notice that we have a very big pool of above normal sea surface temperatures in the eastern equatorial Pacific, moving all the way out into the central equatorial Pacific. This is your El Nino signal, but I want to draw your attention to 2 other areas. One is this little area right off the Baja Peninsula, another one up into the Gulf of Alaska. Both of these have been contributing to an increased strength to the trough coming out of the Pacific Northwest, and this area here bears watching because last year we've seen the same type of signature. We had a very active hurricane system with many of those making it into the southwest that really pumped up their monsoon season, and we expect the same thing. In combination with this El Nino, that should bring a lot of juicy moisture in the western United States. And for Nebraska, what we have seen during these times when we have an El Nino is an increased tendency for above normal moisture, particularly in the August, September, and October period, and centered primarily on August and September. There tends to be a little dryness issue as we get into July, but it's only about 6 out of every 10 events. More importantly, to the west, you'll notice it's very cold conditions. This should inhibit the formation of hurricane activity in the far eastern Atlantic and push it closer to the Gulf of Mexico. If that high pressure remains in place over the southeast, that would steer those tropical systems into the southern plains. And unfortunately, as heavy as the precipitation has been in Texas, this would be another basically swat in the back of the head with additional moisture and flooding precipitation possible if that storm track does come into play.
Thanks, Al. Today's interviews are available on the Market Journal website and through the Market Journal mobile app. They include information on grain markets, the quarterly hogs and pigs report, weed control, and beef exports to Japan. As always, you can keep up with Market Journal during the week by following us on Facebook, Twitter, and Instagram. Next week, Roy Smith will be our corn and soybean market analyst. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.